So let me ask you this: as far as people, there's always doomsday scenarios and people saying a global depression, recession, prolonged bear market. Doomsday. What's the worst that you think that this situation can get?
Art Cashin has a great comment. I don't know if you've heard this before, but he goes, "The end of the world happens only once. It's a trade you have to time very carefully." I've made a career of telling people this is not the end of the world. I think the world's going to go on. I think America will remain one of the strongest economies in the world. And I think what Ian was saying was really interesting, talking about the companies. And I think what your criticism is right, but we have the best companies.
Hands down.
We got Google, we got Apple, we got all the companies that are technologically leading the world. They're the ones that you want to have. I mean, put it this way, I don't see as good companies in other countries as I do in America. Those companies can and should and will do better. We got Tesla here in America.
We got Facebook. We got Meta.
We got Meta. Alpha. Yeah. We got. You can name your favorite ones, but there are companies. This is where the innovation is taking place, which is why I'm going to just get on my high horse for a second. The thing that bugs me the most is this story about immigration. We have to keep our borders open and immigration numbers up. We have to do what we've been doing, which is to attract the best talent from around the world.
Yeah.
And beginning with Donald Trump and continue to some extent by the Biden administration, but they've eased off it. We brought down the legal immigration numbers, and we need to bring those back up. There's a study that I just read that, you talk about the idea, well, where all the workers go? Why do we have this issue? There's maybe 1.25 to 1.5 million fewer immigrants in this country than would have been here if we were on a 2017 trajectory. And one of the reasons why America leads in all these places is we attract the smartest people from all over the world. They want to come here. And we need to make sure that's the case. They come here, they come to our universities, they stay. It's why America leads in patents around the world, why we have the most patents and the most innovation. So it's the one issue that I think we need to be thinking hard about, which is, yes, let's help America to the extent we can, but keep our borders open because that helps America too. And when I say keep our borders open, I want to say keep trade open and keep the flow of legal people coming into the country.
So Shadi went doomsday. I'll go with the term that people have thrown around, economists have thrown around, and that's a soft landing, right? There's two ends of the pendulum, right? It's either we're driving into a recession or there's a soft landing. Can you just explain what a soft landing is in the best way possible for our audience?
Cool. I guess I didn't answer, Troy, your doomsday question, did I?
Well, but that was I mean, you can answer both if you like.
I'm not necessarily a doomsday guy. I have a hard time going there in my head. Maybe I'm too optimistic at the end of the day. But I just have okay. So I'll answer this question, which is the soft landing is the Fed raises rates, inflation starts to come down, and all we get out of that is a modest decline in growth, maybe a little bit negative, but really around between 0 and 1%. And the unemployment rate goes up, I don't know, a percentage point, not that much. That would be a soft landing. Then you get inflation out of the system. The Fed can pivot, begin to reduce rates, and we're kind of off to the races to where we were before in terms of having a stock market that can trade on earnings and not these big macro things by the Fed. That would be a soft landing. A hard landing is the question that Ian was asking earlier. The Fed has to hike rates 6.5%. You have a strong recession, a big decline in multiples in the stock market, and a big sell-off. That would be the thing that would be a hard landing and a huge jump in the unemployment rate, and a big decline, a big contraction in the economy where the economy gets smaller.
What's your favorite Grateful Dead song? Come on, talk to me. Let's get to it.
That's the real question.
Get to that.
So probably Terrapin Station. If it was the song that when I was 16, I said, if I learn how to play this, I'll learn how to play guitar. But of course I learned how to play it, and I still have a lot to learn on the guitar. But yeah, that's probably my favorite song.
And you got to give them context, man.
I play in a Grateful Dead band in the New York area. I play pretty seriously. I'm going to be teaching at Rock and Roll Camp coming up at the Brooklyn Bowl. Going to be playing with Phil Lesh a little bit. And if you guys want to check out the Stella Blues Band, if you like the Grateful Dead, we play almost every song they've ever played.
There you have it.
And he's
ladies
great at it.
gentlemen. Before we leave, I got to ask you a question. We are in a midterm year. The midterm election is coming up. So historically, I'm sure you probably heard it when we was talking about it before, but historically, midterm election years have been very positive for the stock market. October specifically has been a very positive month for stock market. Midterm election years from October to April has been the best for any presidential cycle historically. So do you think that the midterm election, this cycle, will hold true to that? Or will this year be different because of a variety of different things that we're going through?
Well, I was looking that up before, and I can't do the stuff on the midterm election. I completely take what you're saying. It makes sense to me. I will say that there's a lot of weird stuff happening this year. That said, we've come off a long way. I have a running thing of how much we're down from the top. Do you guys have that number? It was 30% before today, I think, right? That we were down off the top.
S&P or the Dow?
S&P.
Yeah, it was
I think we're at
4,800, and now we're at 3,600 now, roughly.
Yeah, I think like 26, 27%,
27.
Yeah, 27%.
Yeah. Close enough for rock and roll, as we like to say. On guitars.
Down 22.
Yeah. So how much is the Dow down? What percentage?
I think 22%. NASDAQ is at, I believe, 34.
Yeah. Yeah. So we've come off a long way. So look, I have to warn you, everybody at CNBC does stocks except for me. I do all the other stuff. I'm like the janitor. I do the windows and the toilets and stuff. When anything's weird like fixed income stuff or derivatives, that's the stuff I do. So I let everybody else do stocks, and I do the macro stuff, and they can all figure their probabilities off of that. I hope this helped a little bit. But in any event, I could see that you can play around plus or minus, plus 5 or 10% on the upside, just because we've come such a long way off. And I have to think the market is beginning to be in a place where it's priced in some worst case scenarios, taking a lot of the froth off the top, and really baked in the idea that the Fed is going further. I think that's something the market has come around to believing. And there was a lot of rejection of that for a long time. I'd get on and I'd say, look, the Fed is going higher. And people would say, no, it's not. And I even got a note from somebody, a pretty well-known name in the industry, said, the Fed hasn't realized yet that it's not going to do what it says it's going to do. I'm like, okay, that may be the case, but right now, I don't think it pays for you to fight the Fed. That said, we have adjusted. The market will come to some form of equilibrium with what is going to happen with the current forecast. And it'll probably go a little bit further than that, in that I think, if you're a dog on a leash and the guy keeps pulling you back every time you switch that leash, at some point you're going to say, you know what? I'm not going to pull on the leash anymore. Of course, my dog hasn't learned that yet, but I'm hoping that's the case sometime soon. In any event, you keep getting whacked by being optimistic. Some point you're going to come back. So I could see that the market might be at some equilibrium where it's beginning to, or it has begun or already internalize what the Federal Reserve is going to do. And that whole analysis that I'm sure you guys talk about, which is, should I buy a stock or should I buy a bond at a risk-free rate, right? Remember now, what did we talk about earlier? You can go and you can get, I'll tell you what you get for 10-year money, you can get 3.67% risk-free from the US government. So that whole, whatever you call it, trade-off that you have to figure out, well, it's now a new world. Before that bond was trading at 0.25%, and it was a no-brainer to buy stocks. It's not a no-brainer anymore, but the market's adjusted for that. I think, all you guys were asking the right question, which is, if a recession hits, we'll probably get another 10% clip down, I would think, in earnings. And the market may not have adjusted for a strong recession, but I do think it's adjusted for where the Fed is going at this point. And that's, I guess, potentially some upside if we can get some stability here, which I think is really important. We just went through this huge shock of England, and then they came back the other day and things normalized a little bit. So I'm kind of hopeful in that regard.
This that Red Panda Anthem. Ian, what's up? This that Red Panda Anthem. Red Panda, what's good? Red Panda Anthem. Your boy going up. I know they can't stand it.